Joining me now to break down what we are seeing in the housing market is Lawrence Yun. He's the chief economist for the National Association of Realtors. Lawrence, it's great to have you on the show this morning, and we've got a plethora of housing data out this week. But with the Fed cutting rates by that 0.5 percentage point last week, how does that impact housing affordability?
Good morning, Kristen. Certainly, the housing affordability had been hit early part of this year, late last year, because of high interest rates. Interest rates are the dominant factor for the affordability. So the fact that mortgage rate is now 6.1%, as you alluded to, and it was up to 8%. So this is already a 200 basis point decline, even as the Fed made its first cut. So the bond market, mortgage market already incorporated what the Fed will be doing. This is a great news for home buyers, great news for housing market revival, especially the sluggish existing home sales market, which has yet to recover, but the new home construction market has already begun to see positive gains.
So the NYSE's parent company, as I referenced earlier, Intercontinental Exchange, now estimates that the 30-year fixed mortgage rate will fall to 5.8% by March, about 6 months out from 6.1% earlier this week. How do you anticipate that could impact demand coming from buyers?
Anytime we see 100 basis point drop in mortgage rate, that induces about 300,000 additional home sales, roughly speaking, 5 to 7% boost to home sales. So the mortgage rate declining. Now, the further decline from current level is more minimal. So going from 6.1 to maybe 5.8% forecast rate that you alluded to, that is a more milder decline. But the big declines has already occurred. So even as the Federal Reserve cuts interest rate for multiple rounds additionally, which the Federal Reserve does not directly control mortgage rate, they control the short-term Fed funds rate. But the mortgage rate declining, that is certainly a positive. I think we have to still wait until 2026 to see home sales back up to pre-COVID 2019 condition. But the worst condition, worst in the home sales activity is already over. For homeowners, they have consistently seen record high home prices because of the housing shortage.
I mentioned the plethora of housing data that we'll be getting this week, Lawrence, and we are awaiting today new home sales data for the month of August. Are you seeing buyers still turning to new home sales due to tight inventory of the existing home market?
Absolutely. The home buyers are not necessarily seeking out a newly constructed home. They're just looking for a home. They just want to go from one home to the next that better fits their lifestyle. And the inventory situation for the newly constructed units are readily available. The month supply situation is about 7 to 8 months, plentiful supply in the new home construction. While on the existing home, which is a larger market share, 80–90% of the market, inventory has been short. But good news is that recently we are beginning to see rise in existing home inventory. So right now, the consumers are looking at newly constructed home. But I think as more existing home comes onto the market, they will look at all broad choices.
Quantify the inventory levels for existing homes out there right now for people who are watching and perhaps interested in buying.
There are 1.3 million homes on the market in the U.S., 1.3. Last year, it was about 1 million. So it is an increase and certainly a welcome increase for consumers with more options. But compared to pre-COVID, when it was nearly 2 million, we're still short on inventory, which is the reason why, given the supply and demand dynamics, not enough supply, home prices may continue to march to new record highs.
When we look across the country, are there certain markets, Lawrence, that you see opportunities in right now?
I really like the Florida market because Florida has seen a sizable increase in inventory. At the same time, they are seeing continuing new residents move in. Job creation is very strong in Florida. So, generally the South region, anywhere from Carolinas, Georgia to the state of Texas, but Florida is showing some interesting dynamics. The Midwest is the most affordable. So if people are seeking the affordability, go to Indianapolis, Kansas City, Cincinnati. These are the affordable markets.
Lawrence, very quickly, all in, of course, there's the mortgage rate, there's the home price. What are the prices do buyers need to be prepared to pay when purchasing a home?
Well, people need to consider the total aspect of it, but the big influence on a small time frame is really mortgage rate. So given that the mortgage rate had made a substantial decline, I think people who may have been priced out, say 3 months ago, want to retry because their monthly payment is beginning to come down given the lower mortgage rates.
Lawrence, thank you so much for joining us. Again, Lawrence is a chief economist at the National Association of Realtors.